Good morning and welcome to another week of Subject to Finance. It's Monday the 27th of August. Three things to cover off this week. I'm going to keep it super quick. The first one I'd like to talk about is the CoreLogic Housing Affordability report that comes out every quarter. There's just a couple of little interesting things here this time, some that might surprise you. So, on a long run average, what we see from this report is that the percentage of household income, and that's gross household income, going towards your home loan repayments has averaged around about 38%. So 38% of that income goes to repaying the home loan. The interesting thing is, going back into the fourth quarter of 2022, it peaked at around about 53%. So that was a record high. So it was right up there. And what we've seen in this last quarter is that has just notched back a little bit, back down to under the 40% mark. Under the 50% mark at 49%. So at the moment, on average, running across New Zealand households, around about 49% of that income coming from that gross family income as a combined whole is going towards paying the home loan. So interesting, easing back there a little bit. Why is that? It could be that the house price piece coming into play, but really at the end of the day, it's probably more likely that people are having a reset on their income. They've actually seen a little bit of income increase. Their income's gone up slightly in that last year or so, and it's starting to roll through into a slightly better household position. Now, that's not what you're going to hear across the board. There's still a lot of people out there that are pretty much throwing everything at their home loan. But if we look at the averages, that's kind of where it sits at the moment. So that's kind of interesting. Another thing I wanted to talk about this week is sustainable loans, and they've become very, very popular across the banks. Most of the banks have something in play at the moment, and that's either zero interest or 1% interest sustainable home loans that cover things like solar panels, heat pumps, EVs, those things that are considered sustainable in terms of helping you as a household to have a lower carbon footprint. And they've become very popular. I don't think there's any bank not doing it at the moment. And now the reason we're seeing a lot of EVs on the road, and the reason I thought I'd talk about it this week is because Westpac's come out with an extension on the program that they had in place to include EVs. So they are now doing finance on EVs at 0% interest, so interest-free. And it sounds amazing. And it is for a lot of people. There's a huge amount of appetite for it. It's obviously helping you with the number of Teslas and Polestars and you know, a slurry of new EVs that we're seeing on the road. So it's working. But the reminder here from me is that nothing is a free lunch, and at some point that interest-free loan, or that portion, is going to get capitalised, it's going to get added onto your home loan, and it's going to become a part of your overall household borrowing. You're going to have to pay it back. So what are the pluses of that? Well, you've got generally 5 years to get to that point, so you may be able to pay it back before then, before that interest-free period expires. But if not, on the negative side, you're going to actually have to add that to your home loan. So that is when it starts to really kick in. You're going to end up paying for that car or whatever it might be over the next 25 years in terms of your home loan. So you better have a plan, because it's going to cost you. And that's the sort of the negative side. And I just think it's worth reminding both agents and anyone, because it's not just a, you know, I'm sure there's plenty of you that are looking at this, that there isn't anything there is no such thing as free money, and at some point that will get loaded onto a home loan and you'll end up paying for it. And the interest that you'd be paying on a home loan at the moment, you know, it's what we were paying going back 2 years ago for a car loan. So it's, you know, you don't want to be paying that over 25 years. So those are my two big things. One other thing this week is just really interested in what's going on at the first home end of the market, and we had a good case that I thought I'd share with you this week in terms of a first home buyer approved for 825, which is well above where they thought the house was going to go for at auction. They were picking high sevens and they thought they had a bit of headroom. They had three other bidders ahead of them. It went for well up into the 800, I think it was close to 870. And so I just thought I'd point that out, that there is, again, a very active market there, and that there's that tension coming back into auctions. But the other thing I've heard a couple of times, and I thought it worth pointing out, is that there's an area of existing homeowners out there that are looking at their overall household income versus repayments, which is what we were talking about earlier, and looking to adjust that to get back into the comfort zone. And so I think what we're starting to see is a few houses coming to market where house owners are looking to trade down to a price range that they can afford to pay again, and that'll affect those first home buyers. But I'm really interested in your thoughts on that, whether you're seeing that out there in your area of the market. So yeah, any comments, just put them in the Q&A on Spotify or in the comments on the YouTube channel, or I'd love to hear your feedback on this particular subject in terms of the downsizing piece. So put it in an email to me if you don't want to put it in those places, hello@tella.co.nz or andrew@tella.co.nz. And ask me your questions. So if you've got questions in terms of finance, if you're seeing your vendors or buyers out there having the same question over and over around something to do with home loans, I'd love to hear what it is. I'd love to answer your questions for you. Have a great week, and we'll talk to you again next Monday. Talk to you soon. Cheers. Bye.